we think 3 interest rates cuts are going to happen in the next 6 months.
You can probably sell your property for 150 grand more to the guy who comes late into the party.
People don't buy houses if they're not in jobs. That's just the way it works. People get a job, people get a pay rise, people move cities, and then they buy a house.
But you know the hardest part is? Knowing what to ask.
How on earth do you work out which area is the best area to buy in? We have a special episode here today with Adi. I'm going to go through our 10-point framework to work out which areas are about to go boom. This is new for us, and I don't think anyone's talking about it, which makes this super exciting. We're talking about economic change, but we're drilling down into it so you can have your own framework for working out how it all works. Let's get specific. We're going to talk through so many interesting points here. We're going to talk through employment stories. We're going to talk through infrastructure. We're going to talk through planning, housing supply. We're going to talk through a proper due diligence framework that we go through at Alaya before we buy in a certain area and understand it and unpack it for all of the clients that are buying at Alaya. And that drives the research piece to everything that we do. It drives the data for suburb level change too. That's what we're going to run through. And in later episodes, we're going to go through that same framework with the suburb data. And then we're going to go through the final layer, the property layers that we look at. The whole idea of this is to give you the full principle, the full ethos of exactly how our investment criteria works and how we're buying. Adi, pleasure again, man. How you feeling?
I'm feeling good, man. This is a really exciting topic.
Yes.
Obviously, we did an introduction in another podcast where we talked about how the macro factors really start to filter in.
Yes.
And we start to see those on-the-ground changes in suburb-level data.
Yes.
This is that framework, right? You're kind of giving it all away. I love it. I love that you're sharing this, right?
I love this stuff.
This is amazing. So if you want to do this, if you want to dedicate the time to do this, you can do this, right? This is fantastic. I love that.
I'll tell you exactly how I do this sort of stuff. So, I'm an economist. I was an economist. I like looking at economics, property sort of stuff. It drives the way I think. But one awesome thing about tracking markets over this last few years that we have is it's so easy. It's so predictable. Everything just follows a path. And you can study the previous path. Right now, you can study Townsville. What happened to Townsville in the years 2018 to 2021? What happened there? Because those are the preceding years to the Townsville boom of today. And you can go through North Queensland and do the same thing. Hobart, you can go do the same thing. You can do it in parts of Victoria and Melbourne. In the other podcast we talked about it. You go back a period of time and you could start seeing it. You can start seeing what those economic changes are that are driving it. And we're going to go through our 10-point framework. Correct. Let's get into it. What's number one of this own framework that we've got here?
So number one is the economic change that is relative to oneself.
Ooh.
Can you tell us a little bit more about that, Red?
Oh, I like that. Yeah. I like that. I like this one. So this one is a broad brush one. So we're looking at how a state's economic activity is performing relative to its 10-year average. So is Melbourne doing more than it usually does at the moment? Are the Melbourneites of Melbourne, are they producing more income, producing more activity every year right now versus what they typically do? Are they spending more at the shops? Things like that is a benchmark characteristic that people do to assess how a state is performing and how a major capital is performing. You compare it to oneself. So really good example, New South Wales, the consumer, the household sector makes up most of New South Wales consumption. It's about 60% of our economy. That is really slowing down at a per capita level. So individually, we're not spending as much money, but there's more people overall. That is an economic change relative to the year 2017, 2018. It's because we're sitting in really high interest rates this year. So that's how you look at a particular point in time, how is an economy performing relative to itself? And that is a constant, you assess that over periods of time because New South Wales gives you some light. It sheds light here where it's just like, okay, if the household sector is paring back, but there's more households there, it's just like more households mean more people need homes. But that means that they don't have as much money because everyone's pulling back in their hip pocket. They're spending less money. They've got less money to spend. But there's more people there who need homes, all with less money. That's an economic change. It also drives the housing demand in New South Wales. So the mix of housing demand is, if you're trying to buy the $3, $4, $5 million stuff, you're probably getting price falls this year because everyone's pushing their money back. But if you're trying to buy the $500,000 stuff, you're probably seeing price gains. Again, the same story in Victoria right now. It's a little bit of a national story, but you can see that because that impact is a national one as well, where there's less money in people's pockets because of high interest rates. But there's more people because of population growth. So that is assessing how an individual economy is performing versus itself. That's how I define it.
Very interesting, Red. That was cool.
What do you think of that?
I think that makes a lot of sense, right? You can sort of see this playing out. It's a macro one, right? And that's some of the drivers that we've been talking about a lot for Victoria. Like, what is that going to look like? And how does that then flow down to some of the suburbs that we've previously talked about? What does that actually look like? And then we take it a level deeper to be like, okay, we've got clients, they've got this strategy. Does this market sort of work for them?
Yes.
Right? That's what I love about the ethos that we have at Alea Property, right? We start at the macro, we get down to the sub level data, and then we start looking at the asset selection that sort of, works perfectly for this person's particular client's investment strategy. So,
I like to break this up into two components. The now, what's happening. So that's a now story. But then I also have the future. This is the reading of the wins. This is the part that I bring to the table here, where it's just like, what wins do I see? Where is it going to change? Like, that's the current setup. But it could change, where it's just like, hey, we think 3 interest rates cuts are going to happen in the next 6 months. Be like, that's a change. Being like, what does that do? I think that might shift people up the affordability framework. You might see the areas like Carrum Downs being like one level up, where it's just like, more people are going to shift there if it's a more desirable spot to be versus the less desirable spot, which is a little bit of a change to the way it's been over the last few years. You're going to start seeing more activity. The economic change of 2025 and 2026 looks different to the 2023 story. It's not the flight to affordability, it's a flight up the affordability framework. So you're going to see more activity in the higher end of parts of the market. It's that cycle moving around, driven by the interest rate environment and some of the changes that are going to kick in. So there's two components to this, the now and also what does it look like in the future, which also drives our selection criteria of where we're looking at.
Correct. Oh, it's fantastic. So we go to number 2.
Yes, but before I do, just for anyone that wants to do this, CommSec State of State Reports comes out every quarter, and it does this. It gives you a current picture of how each state is performing relative to itself, and it tells you a lot there. This also told me that South Australia will do really, really well, that Queensland is doing really, really well. Tells me that because you can see how an economy is performing pretty much over time. Every quarter you can track this, and it's broken up by different sections. So that's how you find this at the now level, and then you have to make some sort of analysis piece and guesstimates. Bro economics is what I call it, about what the future looks like, and you got to make some calls, and that's what people do. And trust your gut a little bit and make an informed decision. That's the economic change. Let's go into number 2.
Number 2, employment growth.
Employment growth. This one is super, super important. The bedrock of buying a house is getting a job. People don't buy houses if they're not in jobs. That's just the way it works. People get a job, people get a pay rise, people move cities, then they buy a house. That's the order of events of life. And that's why employment growth is so important to look at. I look at the labour market dashboard. That's a BI dashboard that the labour company in Australia, the Labor team, whoever they are, the Employment Agency of Australia, they release every month once the ABS monthly job scorecard come out, and it gives you this beautiful snapshot of how each area is going, and you could drill down by specific locations. You can look into Townsville and be like, how's Townsville going? What's the employment story there? Be like, whoa, big increase in jobs. Being like, cool, might be early, that's a big change. Maybe we should look into these areas because that means something's happening. Why are those jobs increasing? Where are those jobs increasing as well? Those are frameworks that I really, really like to look at. It's getting granular, and it does drive a lot of our research. It is driving into the economic story of employment because this gives you so many clues as to what area is going to do well and why North Queensland is a winner, and it's going to continue to be a winner for a period of time and probably has more legs because its employment story is so, so strong. While Adelaide, for example, doing really, really well, but also one where you look at being like, it's scary, because its employment story is weakening. It's starting to soften up there. So it's like, okay, cool. You're getting a really big warning sign where it's just like the economic change, not so positive, bit negative actually. You pay attention to these sort of things and you could start seeing where does it look like and where is something sitting on that cycle before it starts appearing in that suburb level stuff.
Beautiful. I'm really keen on, this sort of flows into number 3 really nicely. So the sectoral analysis, like sectors of employment growth. Can you tell us a little bit more about that? Where do we want to see the employment growth? And where does that need to happen to give us confidence to be like, oh, there's an interesting market to look into?
This is a really good way to picture it. So that's a really good question. Where do you want to see that employment growth? It's actually not what I'm looking for so much. It's not what I want to see. It's what I'm actually seeing that I'm looking at here. So when I look at employment growth in Victoria or in Queensland, I'm like, these numbers are pretty good. These people are employing lots of jobs. Like, it's awesome. Then I drill into the detail, being like, what? It's all the public sector. It's the government doing it. And then I look at the treasury budgets of each of these things, and you have a burgeoning public sector being like, what? Like, come on, man. That can't be where you get all your growth. Like, if the Liberal Party win the election come May or whenever it is, right? Or if there's an economic change that happens for whatever reason and you run a deficit, the government could be like, hey, I need to start cutting all these public servants that have gone and hired. You want to see, I much prefer to see it in certain sectors. So it drives certain narratives and stories, being like, is there more consumption, like retail trade happening? So Victoria is a good example, and New South Wales is a good example where the consumption, the mix of employment over the past year has shifted well away from the retail sector. They're shedding jobs, but the overall state is increasing jobs.
Right.
The health sectors are increasing their jobs as well because the public sector is putting more money into the system. They're pumping money into the economy, and that means more people in public services. So you start seeing that happen too. So you want to be paying attention as to where the jobs are going, because it can also drive your suburb level ideas as well. It can drive the data a bit where you look at what type of jobs are being created. So retail sector areas where it's just like, okay, they're shedding jobs. That might be a bit different. While if you see a big increase in hospital spends and government sector spending, then you're like, okay, maybe that area around that hospital is going to do particularly well because there's just so many new entrants kicking in, because there's so many more nurses and doctors being hired. You can start seeing that in the sectorial analysis. And I have one more added layer here is I don't like seeing too much increase in the construction workforce of a particular location.
Tell us about that. Why not construction?
So the concern there is if there's a big increase in construction, that means in construction jobs, that means that there's going to be a big increase in housing supply. So the construction of other projects, very, very good.
Yes.
Like roads, railways, infrastructure. You see more people working there, be like, that's good.
That's a great sign, yeah.
But you see people in housing, you're like, that's a bit scary. And then let's add a little bit more mix to this is, if you read through government reports now, is a lot of them, this is the economic change stuff. You got to it's not as clear as data on a suburb where you just look at a chart being like days on market, stock on market, percentages. It's so easy to do. It's like, it's clearer, right? This economic stuff isn't as clear. And that's the point of this podcast, to go run through and be like, how are you piecing all of these random bits of information together to make that narrative? And that's what we are doing in getting multiple different sources to try and get our information here as to why an area is going to do well. So that construction story is really interesting because now, if you read all the government reports, there's so much attention on housing supply at a national level, at a state level, at a local level. And in all of those reports, buried in, it's got, we need to do less infrastructure. We need to stop doing this because we have rebuilt our cities. We have built more train stations. We have built more buses and schools and things like that. We've built all of this stuff. Now we need to build homes.
Yes.
But man, we're taking all the jobs. The person building that tunnel, that person can build a house. But we've just hired 100 of them to go build the tunnel, being like, stop hiring them because they've stopped building houses. So to free up capacity in the housing supply story, you need less activity here. So this is where the random source information actually helps, because you're going to start seeing that in the shift in employment over the next year. I think you'll see, reading the winds, you'll see much more people in housing construction than in public sector type construction. That's going to be a change. And it's going to be the same people moving from here to here. So that could be a little bit of a concern, just looking at where that is happening and which states that are happening in. Again, the employment dashboard has all of this in there if you really take a close look at them.
You know what I find really interesting is that this framework that we're talking about at an economic level, macro level,
yes,
anyone can do this, right? But the problem with this is that if your research thesis is superficial, even like notionally, right? You're like, oh yeah, I look at economic drivers, I look at construction, look at how good construction's doing. And then suddenly there's a whole sub-layer to it. You're like, oh, wait, construction and housing is not a great indicator of like price growth because that means there's,
yes,
there's potentially an oversupply of stock coming onto the market. However, if there's a lot of sort of stuff happening in the infrastructure level, that's a great thing. So I guess going back to our original point of like, reading that economic data, it's really, really important to really ask, some of those deeper level questions of why is there money flowing into this particular part of the sort of sector, sector, and then deep diving there. Don't just stop there. We're like, oh, construction's great. Yeah, let me go and let me go and invest in this place, right? It's asking those deeper level questions. And when we sort of do this on a day-to-day basis, it's sort of almost second nature to us. We ask those questions because
pretty much,
we ask that question of every area we look at, right? So no, it's not hard to do, but it's not simple in that anyone can do this because you need to have the time and the almost like the veracity to be able to pull this off, right? That's how I sort of look at it. Right?
Never thought of it like that, but I spend my time on my phone is looking at stuff like this. Yeah. It's not social media apps that dominate my phone usage. It's regularly looking at reports and things like that and just piecing different bits of information together to form that economic narrative as to why an area is changing.
Exactly.
And that it's just a really, really interesting sort of pathway to look at. So, that's pretty clever.
I love it.
What have we got here? Oh, this is my favorite one. Housing.
I was going to say housing finance
trends. This I like because it uncovered Darwin. You want to know how Darwin was discovered by, like, why we talked about Darwin as, whoa, what's going on here in, like, we looked at May, June, July housing finance data. And it was like a 30% increase in the drilled down ABS data. Like you got to download the report, look at it and being like, Darwin housing finance data is down 25% over an 18-month period. And then like I placed the phone call and being like, read them, that doesn't sound right. And then I'm like, actually, let me retick the clock, being like, why am I looking at Darwin at the same time period? I used an 18-month time period because that was the down cycle of the Sydney housing market where it's just like, hey, okay, that's where it's slowed down. But then narrowed it down to a 3-month period and be like, Darwin's down 25% in housing finance over a period of time, but it's up 30% in the last 3 months.
That's
being like,
crazy.
Whoa, what's going on here? Something's happening. That has to be a reason for why that's happening.
Can I just ask, Red, just for the audience, when you say it's up 30%, what exactly it is that's up 30%? When you say housing finance,
number of investor loans,
of investor loans,
or the aggregate value of investor loans, and I also track. This is why I love housing finance data so much. It's the aggregate value of. That sounds so crazy. I love housing finance data. Yay!
You're such a nerd.
But it gives you the aggregate. And no one talks about this. Maybe that's why I like it even more because people wouldn't even know how to look at this. And they'd be like, why would I look at this? That's why audience, I reckon, pay attention to this is it also gives you the composition. So are there more first-time buyers? Are there more owner-occupiers?
Interesting.
Now you know who is buying in a certain market.
Yes.
Adelaide, you want to know who's buying in Adelaide? It's buyers agents buying in Adelaide and it's property investors buying in Adelaide because you've got 7 times the number of, in growth terms, the number of investors there versus owner-occupiers. Being like owner-occupied growth is this much, but investor growth is wild there. Tells you that it's just investor-centric. Yeah. Darwin has the same housing finance data. As we drill into it, being like, it's not owner-occupiers buying it, it's investors. We're going to see that go wild. It's going to go nuts, which also scares me. And, when we're talking at a client level, being like, you might want to put Darwin here, but be aware, it's risky. It could yo-yo. You want to yo-yo up and be like, roller coaster, woohoo.
Yeah.
But also expect a bit of a bumpy ride, being like, does it suit your strategy?
Yeah.
Pay attention to this data and it tells you a little bit like as to where the volatility is. And it also tells you when to get out a little bit because of that housing finance data mix.
I mean, but the cool thing about places like Darwin and some of the other ones we've talked about, right? The flip side, the positive side is that if you're tapped into the market, you sort of watch the data quite regularly. you can probably sell your property for 150 grand more to the guy who comes late into the party.
Exactly.
You know, 18 months later. Right?
Yeah, for sure.
It's great. I mean, it's not a bad outcome. You just have to be on top of these things.
I love that you have that perspective. It's something that it's new. I think it's new framed buyer's agency where it's like we act as advisors, not just the concept is you're part of the transaction to buy a house, right?
Correct.
But the reality is we're here to help people achieve their financial goals. That doesn't mean be static. It doesn't mean just buy. Like I know that the model is paid on transaction, but one thing that I really like at Flint Invest and the mortgage broker model is we get paid to advise continually over the period, right? Because it's done. The remuneration arrangements are based on a continual journey with that customer. I feel like the buyer's agency space can benefit from that a little bit because there's the advice piece often may include. Could be time to sell. This is what we expect in these markets. We bought in these markets a couple of years ago, but it's time to think about, hey, there could be a change here. Yeah. Does this suit your strategy going forward? Be mindful of it. Yeah. A stock picker, for example, they're not saying hold on to these shares, CBA shares forever. They say CBA shares are buy now and then sell later because the price changes. So that's part of the story.
Absolutely. Makes a lot of sense. Love it. We announce housing supply data.
Housing supply data. This one, pretty common. This one's on most people's data metrics. So you look at housing supply data, what's going on with housing supply into an area. It's really, really important. Approvals, commencements, starts. So those approvals and commencements and completions. Sorry. I knew I got one wrong. Approvals, how many is coming online, commencements, how many is starting, and what's been completed. You want to get a good picture of what's going on in an area. You can get all the way down to suburb level. I think that's probably a little bit overkill going suburb level there. And this is the bit that everyone gets so confused with. I love watching the Instagram videos where it's just like, you bought in this area, but this area has a lot of housing supply kicking in. Of course, it's got a lot of housing supply. It's a freaking greenfield area. Of course, it's going to get housing supply. Be like, that's not a reason not to buy in that area alone because it's got high housing supply coming in. It's like, of course, it's got a high housing supply because it's new. It doesn't have any housing at the moment. So all of it's just new housing supply.
Really? New housing supply?
You can do well in these areas as well. Okay. So you got to be mindful of how this data fits in. If I pay more attention in looking at existing areas as well. So, let's pick the inner south LGA of Sydney or the inner east and be like, cool, what does housing supply look like over the next few years? And look at the context of it as well. Are apartments coming in because there's flow through? The New South Wales government uses this weird word. They call it trickle-down housing supply, which is the weirdest word where it just says, they meant it in the economics word where it's just like, if you build a new apartment for a rich person, being like the rich person will get away from the middle house and go into the nice one, and then they'll open up the middle house for someone from a lower income person to go into the one, and then the lower income gets free. So they were kind of justifying, let's just build rich homes. Trickle down housing, man, let's do it.
That's how that works.
That's how they were talking about it. So there's some conceptual analysis to the type of housing supply to deep dive into as well. So it's a good overlay to work out what's happening in an area, but it doesn't work in isolation. You got to contextualize it a little bit.
Absolutely. Makes sense. Love it. Let's smash out. We've got planning authority pipeline and delivery capability. That's a spicy one.
Delivery capability. Yeah. Wow. I've chosen some funny words here.
You have.
I've chosen some spicy words.
You have.
The gap between planned and actual housing supply. Okay. This one I really enjoy as well. It's about understanding what a government is doing with housing supply because this will drive the housing supply. It's getting more and more up here, right? But like when you talk about housing supply, right, it's a data metric, it's there. But what is driving that housing supply in years 1, 2, 3, 4, 5, 6? It's government changes, government policies. What are they doing? More housing supply in Western Sydney, in parts of Western Sydney, you can actually work out what's going to happen in year 3, year 4 by reading those planning authority ideas and being like, cool, they're putting a school here, they're releasing land here. That kind of gives you a little bit of a sense as to what they're going to do. This is really, really important for suburb selection as well because planning authorities have changed their tune of late and now it's much more infill based. In Victoria, the planning authority has come out explicitly and said, we have built things wonderfully. It's time to go up. New South Wales is doing the same thing, drawing circles everywhere and being like, up we go, all around existing areas, being like, cool. They're just saying that all our infrastructure is good now. Like we've built the M8, we've built the M6, built the North Connects, we've built like 20 new train stations. Like we've freed up capacity. We've got the new metro lines kicking in here. We've got light rail. All this has happened in the last 20 years, right? We built all of this stuff. Now the housing still looks the same, being like, let's go up. That change in strategy also changes the frameworks of how property investing should work. So it's about paying attention to that economic change, the planning change that drives the housing strategy change. So that's another layer to look at for property investors.
Interesting. I like that. That's really good. I think it probably flows in nicely to the next one. I'll skip number 7. I want to get into infrastructure investment locations and gateways. Can you walk us through that?
Right? Yes. So in certain areas, you have certain types of planning that occur. So it is very, very specific to a isolated location. That a good one is Sunshine. Another one is St. Mary's in Sydney. I can't think of any Brisbane ones because I don't know the market well enough there. But these areas that are like hub spots to the new infrastructure. So if a new airport's going in, right, being like, cool, that's happening. But that has so many sub-consequences there. Being like, there's a new airport, be like, how is people going to get to that airport? How are they going to connect from one airport to another? How are you going to get from the CBD to that airport? Raises all these questions where it's just like, we built this thing, but now you need to build 5 other things. And then you find out which one's a gateway to all of this. Being like, cool, everything needs to connect via here. Sunshine is a good example. It's a connector for multiple different platforms. Now, those connector points, if you've got detached housing around connector stations, that's wild. It doesn't make any sense. Go to Strathfield, like in Sydney, go to Parramatta, another gateway sort of location. Sydney Olympic Park, another one. Go through all of these gateways that are properly planned, and you have huge towers that go there because you've got to pay for that gateway connection. And the best way to pay for things for a government is like, one of the only ways they can do it is being like, cool, you have 50 residents here, all on 1,000 square meter blocks. What if we made it 50,000 residents instead and charged each of those ratepayers twice as much as those 50 that are there? You've just 100x'd your revenue, and that is how they actually pay for things.
Interesting.
So the economics of this means that when you have these gateway locations from the changes that are occurring from the infrastructure, you have to find a way to pay for it. It's called value capture. And that value capture is made by upzoning land, and that creates awesome opportunities as well for property investors.
Amazing. I think I've heard you talk about this in past podcasts. This is how you sort of spot the potential. So if you're a regular investor, what's your way to identify these gateways? Like how do you find a Parramatta? Like how do you know? What are you looking for?
I pour through government planning policies a lot. And then maybe it's a long time of reading lots of things. So if I'm a commercial investor, as an example, I like large industrial areas near train stations. Being like, do you need a large industrial station? Like near a residential railway station? Like one where a passenger one where people go, do you really need huge industrial stuff? Like, it doesn't make any sense. Being like, this is a bit weird, right? Those areas always turn into towers. Like, it's just a matter of time being like, because again, the government's like, cool, got to go up. Where do I go up? Oh crap, I've got 250 square meter blocks here. It's never going to happen. I can rezone this to 100 stories. It's not going to happen. It's not practical. But there's one warehouse there.
With sitting on like 4,000 square meter block.
With one owner. Right? You can just come up with a deal with that person, right? Being like, cool, that kind of tells you particular location. So there's a lot of nuances to this, to working it out, but that's one that I look at. So I often Google Maps it a bit, like just top view it. I mirror that with government planning reports and understanding it. There's a lot of I spend a lot of time reading council meetings and council planning strategies across different councils across Sydney and Melbourne. That drives a lot of the investment thesis that we have as well. It's there, if that makes sense. It's just, do you like reading it and do you like finding information? One thing that good property investors do is you become really resourceful. Like you just find ways to get information because you call counsel, you call real estate agents, you call fellow investors. You just pick up the phone and chat to people. It's our profession. So you become resourceful, and this is probably a resourcefulness component of finding these bits of information.
No, you know what I love about that? I agree with you. Resourcefulness is a huge, huge driver behind being successful in property investing. But you know the hardest part is knowing what to ask. Like how do you even know to call the council to ask, exactly what's happening in these areas? So it requires a certain level of,
we get
almost want to say personality.
We get this a lot.
It's just what do you ask? Like, what am I looking for? What website am I even going to ask the right questions? So.
Sometimes we see that where someone asks me on chat, like they get a chat GPT, 10 questions to ask your mortgage broker. And I feel like I could start singing Frozen.
Yeah.
And they'll be like, that's the right answer.
That's amazing.
You could be like, you're asking a question, but you need to ask ChatGPT, what's the right answer? Give it a Q&A.
Can you help me build a snowman?
It's really, really funny. I'm doing a job interview today, later today for people. By the way, little segue into it. We are hiring at Flint Invest. We are hiring at Alaya. You can talk more about that. Alaya Property. We need people. We need firepower. We need great property minds. We need people who love the journey of property investing and want to be part of the team. Pick your side. Blue or maroon. We need people.
Yeah,
we need help. So anyone looking to get into the property space, I'm probably talking to specific people. If you're a credit whiz, like a genuine credit whiz, you work at a private bank, you work at a commercial bank, you love credit, you're just a home loan whiz, you like approving loans, I would love to hear from you. This person would be a unicorn, a needle in a haystack. I'm looking for that person who loves property and also is a credit whiz. We are looking for mortgage broker salespeople. We are looking for people in the buyer's agency space.
100%. Yeah. Alaya Property is growing. The demand is growing, so I definitely need a bit of a team around me. I'm looking for a client success manager. Basically, you love property. You live and breathe the stuff. You're reading the stuff because you want to. You skip, your Friday night outings with your friends because you want to check out, the new hashtag mastermind that was just dropped. So that's the kind of dedication I'm looking for. Because that's what I do. I don't have a social life. I just watch property videos. So that's
there goes everyone. I'm not buying it. This sucks. These boys.
These guys are
I'm
nerds.
not doing that.
That's right.
Expects me to skip Friday night tricks to watch hashtag mastermind. No chance, Adi. This is
fine.
dreamland.
You can have your Friday nights, but Saturday morning, I want you there, bright and early, watching some masterminds from Matt. We're looking for client success managers. You're a people person. You love talking to people about strategy, about property, understanding goals, really teasing out those, the meaty answers from clients because it takes a certain level of skill. So if that's you, get in touch with me. My details are going to be in the description of the podcast.
For sure.
My email, if you want it, addy@alayaproperty.com. I'm also looking for someone who's an absolute whiz at sourcing properties. So if you like picking up the call and picking up the phone and calling real estate agents, give me a shout. I would love to hear from you.
Yeah. And some people have asked, what's life like at Flint? I am now running pretty much Australia's largest mortgage broking company. A crazy statement that I was like, what is going on? We did a team call recently and there were like all these screen, like little circles. And I was like, what? Is my computer glitching? Because it just went for pages. Yeah. We have a big team already and we are constantly looking for people now that we work for a larger business that services clients all across Australia and the world now. We are looking for credit people, mortgage broker people, anyone in the home loan sort of process. I would love to hear from you. We will put in links to our recruitment site that we're putting up together at the moment in the feedback below. And yeah, I'd love to hear from you. It's always so great to get people, our audience on our team. That is always the best. And our last couple of hires have come straight from this podcast. So I'm talking to somebody right now who's looking at me being like, I wouldn't mind working for that idiot. Like, okay, cool. He seems like he would be okay. I'm not so sure if that's true, but I would like
you'll find
to have
out.
you on my, you'll find out.
Dun.
Yes.
Love it.
Right, what did we get to?
We skipped number 7. We're going to number 8. Let's go back to number 7. Government budget changes.
Oh, yes. This is Nerdsville. One of my favorite times. One of my favorite days. This could be a top 10 favorite day of my life. I feel really bad saying that out loud. Hopefully my wife's not watching this one. But one day at Treasury was budget day. This was the first budget day I've ever gone through. And on budget day at Treasury, sometime in May, I think, the budget comes out and you all go into a room and you get this like stack of documents. It looks like an encyclopedia of how the government's spending money. And I was not even aware that this thing existed up until this moment. where we were working on a budget for a few months. And then I got locked up into a room where you get locked up. You can't actually leave. A little bit like this studio. Bit crazy, but you can't leave. And you have to stay there. You can't keep your phones in. You can't talk to anyone. And they say, here's the documents. And we had to go just walk around in circles and see all the journalists and try and help them answer any questions when they had any questions. Journalists are sitting there, bored out of their minds, being like, can I get out of here? Who wants to read this stuff? Meanwhile, I'm there, I'm like, what is this document? It's the best. It keeps going and going and going. It's got so many information sources in there. And the government spends money in like 3 gazillion ways on hundreds of different sort of programs. These budget documents are amazing because they tell you so much about where the government is spending money. And the government happens to be the biggest employer in absolutely every single city. The single biggest employer is the government. They drive so much behavior. And even if they're not employing, they're spending, that drives a lot of the domino impacts. And it's a big source of change as well because the government can yo-yo in their expenditures up and down. So I love looking at government budgets because it tells you where they're spending money, who they're spending money on, and what they're doing. And it also tells you the change in their budget position, which is also the economic narrative that's going on in that state. So there's a richness in government budgets that's there. For those that don't know how to do this so much and what they're looking for, I actually, like this is crazy, I actually really recommend using ChatGPT and saying, be my economist, dumb it down for me like I'm a 5-year-old. Can you please read the Western Australia state budget and tell me how much money are they making and how does this look different to the last 5 years or 10 years relative to itself? It'll tell you that the Western Australian government is swooning with dollars, just dollars. I got money. That's the WA government right now being like, we signed a deal of a lifetime when things were bad and now things are good, and those federal suckers, we're getting money out of everyone right now. They're like, it's just like money's pouring out of them. That's what it's like in WA at the moment. That can help cushion. There's a cushion impact in WA that's going to happen. Like this year, things are going to slow down a little bit, particularly with this trade war stuff happening. It's cushioned a little bit because the government is just literally in a bathtub being like, money, right? That's the position that they're in. So you can kind of get that from ChatGPT a little bit when you just like look at it being like, what? Are they making $10 billion more than usual while they only make $2 billion usual? That seems like a lot more. It can tell you a little bit. So
amazing.
I like looking at it.
So what is it exactly telling you? So the government's richer. Great.
Yes.
Does that mean the politicians are richer? So what does that mean? Are they just... What does that mean? So they've got a lot of money to spend now.
Maybe in my country, Bangladesh, but I hope I covered my mouth there because I would get in trouble. I could probably be like jailed for that. So that's not how it works in Australia.
Right.
I find that amusing that you thought that as well. It's just like, that must be how people think. When the government gets rich, the politicians don't get rich. In fact, the politicians actually never really get rich. No matter what they say, YouTube commenters, I know you're going to watch this and be like, damn that guy, government gets rich. They're stealing my money. I know you're going to say that, right? Go for it. It helps the algo. So feel free to go do that. But it means that the people can be taxed less. It means that they can have more money to invest in things. It means that they have more of a war chest when things slow down. This is the WA story. They've got a bit of a war chest to increase spending when in a time of slowdown because of mining or anything like that. They've developed a war chest. So it's just like, let's go build lots of things because we need more employment to happen. We're the biggest employer. Let's go employ lots of people right now. Why can we do that? Because we've got these giant ass war chests from us and we don't need to go tax everybody. Meanwhile, you look at Victoria. I did a video on YouTube about the Victorian economy and the Victorian budget, unpacking their very own budget in detail and looking at it being like, why is the Victorian budget bad? It is bad, but why is it bad? And is it really that bad? It's all a function of the COVID period where they were shut down for a long period of time and they opened up this fiscal deficit. So where they just had to spend more than everyone else to keep the economy functioning because everything was closed. And all of it is really just that little period and the interest payments that you got to pay on that on a sustainable level. And they've made some of the tough decisions. So in Victoria, one of the reasons why it's had such a big slowdown over the last 4 years is the government's finances have been really messy and they're taxing property investors, and all these property investors are like, I got to get out of here. Get me out of here. The government's after me, right? And interesting. It tells you a little bit there. Again, you need the same metric. Our 10-step metric that we have here is what it looks like now, what it looks like in the future. So WA would be a good example of what it looks like now. What does this mean in the future? Bit of protection. Maybe that can help cushion the downside element a little bit.
Fantastic, man. The cushioning aspect is something that's completely new. right? They've got this war chest. So if you can play that back in layman's terms, you've got this war chest sitting there. You've got more money than you've ever had.
Yes.
If things start to slow down because of the trade wars that are basically happening in the background, the government is like, oh, okay, we don't have to go and increase land tax and any of that stuff. We don't have to do any of that stuff. We actually still have money to still spend like the economy is still thriving. Like there's no trade wars happening.
Yes.
That provides effectively a cushion. Increased spending, that's right. And that effectively provides a cushioning for any downturns that the
version of that.
It's fantastic.
Exactly. So if you just do some numbers, just say mining makes up 50% of the economy but has a 10% slowdown. That means that half your economy has just fallen by 10% year on year. That's pretty massive. This is just random numbers. So you've had a 5% drop in output. Now, if the government sector goes as a 10% increase in output, then like net, it's the same. The composition of things will look different, right? Be like, where are those jobs? Some areas that, mining regional towns will completely suffer, but Perth and other areas may do well wherever they're putting the dollars in. Like, you can see the composition changing here. But the net impact is activity is still neutral here. So it's cushioned. That big blow of a 10% drop is cushioned completely because it's been caught up by a different area. That's how governments work. They always work like this, where it's just like, we had COVID, Victorian example. You shut the economy down, what did the government do? They went and spent more money. The government comes in during periods of economic downturns to come in and support the economy. That's the way, that's part of the government's job. It's one of their main roles, actually. It's to help manage the fluctuations in the economic cycle. Governments use fiscal policy to drive that around, and that's their budget. So that's why it tells you so much. And then it's got so many compositional things in there as well. It tells you where to look. It tells you where the projects are going. They're buried in things called budget measures, which is typically the second. There's encyclopedias, multiple encyclopedias. One is like this beautiful story about this is what the economy looks like, right? It's good. Typically, that's what it says, even when it's bad. Or when it's really bad, we're like, there's a bat flying around and there's some problems here. Then there's the other side of it where it's just like, where are we spending money? Where are we cutting our money from? It can tell you a little bit and it could get really suburb specific there. It could give you a lot of insights.
Fantastic. That's learning so much.
Is nerding out.
I know, I'm loving it.
Yeah.
Changes in credit supply.
Yes.
Number 9.
Let's look at number 9 and number 10 together in the interest of speed. We've got supply of credit and the cost of credit. So this is interest rates and lending policies.
Beautiful.
These are very, very important. We've talked about this on many, many podcasts and we'll keep talking about it, especially with Curtis because he's the whiz in this space. When you change the amount of money that people have to borrow or the amount of money in the system or the price of it, it drives a lot of downward flow impacts into the property market because it's a direct flow. The cost of a property that people actually pay is a function of the cost of credit. You might be paying $500,000 for a home, but it's actually $950,000 when you put in the cost of money. But it could be $850,000 if rates are cheaper. It could be $1.2 million if rates are more expensive. So it changes the price of a home. It's just we don't fully see that. So it really impacts asset values. It's massive. And it impacts different markets differently. So the change that's coming, the next, our call, my really rough call, February, this will probably get released afterwards. So I'm going to look like an idiot or not so much of an
genius.
Idiot or a genius, or just something stating the obvious. February rate cut, I think it's April. It's the next one. And then July is probably where I'm looking at being like, there's 3 rate cuts in 4 months. Some version of that, maybe 3 in 6 months or 7, 8 months. I don't really know. But that's a subtle change in credit conditions. That means 7.5% increase in borrowing power for everyone. That means I did some quick calcs on my property portfolio. It's like close to $100,000 a year, across my debt size. Being like, well, that's nice. Just got an extra $100,000 a year. Thank you. That's just from interest rate changes. It's a lot of changes to people's portfolio positions where it's just like my cash flow is going up. Finally, yes. Right? That's the situation that people are in. So that changes behavior with investing and it changes the type of investing people have, where they're looking at. That changes which markets are going to do well. We're going to have this opposite story of the affordable markets doing really, really well. It's going to change. It's going to be like that.
Absolutely.
The more expensive stuff's going to do better.
Because it still comes down to affordability, right? Affordability just changes its parameters, right? What's affordable today at 6% interest rates?
Exactly.
It's a different market. Like at the Carrum Downs, 800,000 is suddenly a lot more affordable for someone when the interest rates are 4.5%.
Exactly. Yes.
And that's where you start seeing that shift. The last 3 years that sub 450, sub 500 market has absolutely boomed.
Flown. Yes,
It's flown, right? Because that's all people could afford. Right?
Exactly. So yes,
But
studying this credit control behavior really impacts things a lot. Sydney and Melbourne specific as well.
Yeah.
So this is my main thesis for Melbourne as well. You know, we've talked about on many podcasts about Melbourne.
Yep.
Why we invest in Melbourne. My main thesis of the economic change in Melbourne is that retail sector that I've just said that has lost, it's shed 40,000 jobs.
Wow.
40,000 people have lost their job or moved out of the retail sector in one major capital. Those 40,000, they're coming back.
Yes.
There's 20, 25, 30,000 coming back because people are getting more money in their pocket. The government is giving out rebates left, right, and center. The tax cuts have kicked in. Lending policy changes may kick in. That's more money kicking in. It's like inflation. Boom, we beat you. Now it's time to re-inflate. Let's go inflate. Let's go. Right?
Yeah.
It's a change.
Yeah.
This is the change. Melbourne is going to be a huge winner from this. It's going to be driving that like improvement. This is going to be the underlying ignition. It's like turning the barbecue on and being like, boom, let's go.
Yep.
This is what's going to drive that Melbourne change. It's going to completely turn around Melbourne from negative to positive. And Sydney as well. Like Sydney's going backwards now, but I can see Sydney, you know, posting a good-ish year at some point.
Yep.
Probably post-July when the third rate cut kicks in and be like, oh, that's cool.
You can afford things now?
I believe in you. Thank you, RBI. I feel good. That's going to be the change. So
love it.
That's why it's so important.
Very cool, man. I think that's a great framework. So what's your main takeaway? You're an audience member, you're listening to this, you're like, wow, I love this. You know what? He's just giving me 10 steps to up my economics game. I'm feeling like an economist right now.
Yes. My main takeaway is behind the data-driven approach to finding property suburbs. Behind all of that is the change in the frameworks that we talked about here. If you understand these changes, the data will simply follow. Changes in trends in a certain location, they happen for a reason. Don't just look at the trends. Start paying attention to what is driving these trends and why. That's why we have a lens, a investment research lens that focuses in on economic activity, on economic change. It drives data change and it lets you be ahead of the curve. And that is how you do property investing. You buy when it's slow, you buy when it's cold, and you buy before a market is going to take off by assessing these economic factors holistically across a whole broad range of metrics in your decision making, both in the now and in the future. You understand that that does have a little bit more risk than just buying in a hot market where it's absolutely obvious it's going to do well. But you do this right, it is foundational investing, it is long-term investing, and it is based on real actual human livelihoods changing for a particular reason, and you have reason for it. And that is the investing philosophy at Alaya wrapped up in a nutshell.
Absolutely.
And you've got the whiz here, Adi, who then does the magic behind the rest of it and then digs it in with the data analysis, with the suburbs and your buying potential and the whiz in actually sourcing deals.
That property.
That's the obvious next part.
That's what I love about our ethos, man. We have 3 pillars effectively.
Yep.
We have the economic pillar, we have the suburb level pillar, and then we have the property selection. You pair those 3 together.
Perfect.
It's hard to lose.
Potent.
You can do very, very well.
Yes.
So.
Pleasure, Adi, as always.
Thank you, man. Thank you for having me.